I know your time is valuable, so let's dive right in. In this video, I'll cover Palantir's impressive earnings results and highlight the key metrics I believe are essential to keep an eye on. I'll also share my thoughts on Palantir's current position in the AI market, both short and long term, and update where Palantir ranks on my list of stocks to get rich without luck. Even after the recent market downturn, I think the stock has held up well. Let's start with Palantir's earnings. The company posted a record $678 million in revenue this quarter, a 7% increase from last quarter and a 27% rise year over year. Even more impressive, their U.S. commercial customer base grew by 133% since last quarter and 83% year over year. Over the past 3 years, the U.S. commercial customer count has surged 9 times. Palantir closed 123 U.S. commercial deals this quarter, nearly double from a year ago, and the value of those deals has increased by 152%. This growth means Palantir is not only landing more customers, but also signing larger contracts. As a result, U.S. commercial revenue is up 55% year over year, a significant jump from the 33% they reported less than a year ago. Government revenue also performed well, with U.S. government contracts growing by 24% and overall government revenue up 23%. This is crucial for 2 reasons. First, it proves that Palantir doesn't need to sacrifice its government business to boost commercial growth, which was a concern a few quarters ago when they only saw 6% revenue growth from the U.S. government sector. Second, this is the first time Palantir's trailing 12-month U.S. government revenues have surpassed $1 billion, signaling that both domestic and foreign governments are increasingly choosing Palantir, especially as geopolitical tensions rise in areas like Asia, Europe, and the Middle East. What excites me about Palantir is its ability to manage its balance sheet well. With steady operating expenses, their margins explode when both commercial and government sectors perform. Palantir's GAAP and adjusted operating margins sit at 16% and 37% respectively, which is impressive considering they achieved profitability less than 2 years ago. This success contributed to a 7-point increase in their Rule of 40 score, which now stands at 64, up from 57 in the first quarter. If you're unfamiliar with the Rule of 40, it essentially measures a company's combined revenue growth and profit margins, with a score of 40 or more being a good indicator of a healthy software-as-a-service business. Palantir's score of 64 is outstanding, especially compared to other top-tier SaaS companies like Adobe with a score of 50 or Splunk with a score of 53. Palantir has seen its revenue growth accelerate over the past 4 quarters: 17%, 20%, 21%, and now 27%. Combine this with expanding operating margins, and Palantir could maintain one of the highest Rule of 40 scores for years. In addition to the financials, Palantir raised their full-year revenue guidance from $2.68 billion to $2.74 billion, surpassing analyst expectations. They also increased their projected U.S. commercial revenue growth to at least 47% year over year and raised their adjusted operating income forecast significantly, from $874 million to $970 million. Palantir's earnings per share grew by 500% year over year, or 80% on an adjusted basis, exceeding already high expectations and contributing to their stock surge. Palantir's rise in the AI market is also something to note. As one of the few pure-play AI software companies, they've positioned themselves uniquely, focusing on helping enterprises and governments implement AI solutions. Palantir's customer adoption, especially through AIP boot camps, where companies work directly with Palantir engineers to build AI tools in under a week, shows just how quickly businesses can realize value from their platform. The company is expanding into various industries, from insurance and life sciences to retail, showing its versatility. Palantir's ability to generate quick value for customers is what sets them apart in this fast-evolving AI space. They're bridging the gap between cutting-edge AI solutions and the businesses that need them, positioning themselves as a key player for the long haul. All this leads me to update Palantir's position on my list of stocks to get rich without luck. Microsoft remains at the top, given its dominance in AI through Azure, its partnership with OpenAI, and recent talent acquisitions. Nvidia follows closely as the leader in AI hardware. However, Palantir, which started at the 9th spot back in December 2023, has climbed even further. I'm moving Palantir up just above Google on my list due to its rapid progress in AI implementation. If you found this breakdown valuable, don't forget to like and subscribe. It helps me out and lets me know to keep creating content like this. Thanks for watching, and until next time, this is ticker symbol U, reminding you that the best investment you can make is in yourself.